Why do we invest in individual stocks when we can just invest in the index, follow the market, and be done with this? Why do we invest in companies like PayPal, for example, an individual stock that has basically done close to nothing for many, many years? If you go back to 2017, you would see the exact same price as we're seeing right now, just under $62. Now, that's not to say that the stock didn't go up over $100, $200 throughout the years. But if you bought back in 2017, right now you would probably be flat-ish. But right now, if you look at the 5-year mean, so obviously back to 2019, the stock is basically undervalued if you compare it to the current metrics: forward PE, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth. Now, of course, throughout the last 5 years, you had a pandemic, so a higher rise in revenue, profitability, users, etc., etc. And then you've got the aftermath of, well, the downturn. So you have to take all of that into consideration. But again, why do we invest in such companies? Why do we invest in individual stocks instead of the index? It's because we think we can pick out winners. We think we can pick out stocks, investments that will obviously outperform the market in the short term, and short term can be 6 months, can be a year, can even be 2-3 years. Long term, to me specifically, is more of a 5 to 10 year period. Now, of course, I'm still young, so I have time to make mistakes. I have time to watch things play out. And to me, seeing things like this, these types of valuations, this is not fair value, this is valuations, this is pricing, let's say. To me, this looked like a no-brainer for a company of PayPal's strength. Yes, I still think that PayPal is extremely powerful and extremely strong. It's true it had some weakness going out of the pandemic. It's true it was mismanaged with regards to a couple of business acquisitions, the way they were evolving, etc., etc. We know. But right now, I think things are moving into the right direction. Of course, you might think I'm completely wrong, and that's completely fine. I'm the one investing here in PayPal. If you don't believe in the story, you should not. Nobody is forcing you to invest in stocks like PayPal or Tesla or SoFi or Palantir or Microsoft or Nvidia or whatever. It's just the choice we're making when we're investing in individual stocks. Why am I making this whole story? Why am I talking about that right now? Because PayPal, just like many other stocks in the short term, in the last year or so, have not really moved that much. These are the types of stocks where, despite the bull market that we're in, has not really made any returns for long-term investors. And it's normal. It's the type of company with now a completely new management, really driving the company forward in many, many ways, whereas before, management were a bit lackluster. They were trying to do many things at once, not really looking at what the core business strength was. Right now, with Alex Chris, with the new team that he brought in my opinion, things are looking way rosier than ever before. And currently, despite the stock being flat year to date, despite being actually red year over year, only 0.26%, shareholders are being rewarded. Purely looking at the last 3 years. In the last 3 years, close to 11% of shares outstanding have been retired. Yes, it's true that free cash flow per share could have been a bit better, but I think we're going to see that metric become better in the years and years to come as this company grows in a profitable way. And I don't think I'm the only one that thinks that the stock right now is relatively cheap. If you look at the average analyst price target, sits at $77. That represents close to 25% upside from the price we're at today. And for those that are interested, whether you're seeing it as a positive or a negative, is up to you. ARK Invest bought more than 150,000 shares of PayPal last week. They sold new holdings and Teladoc. And so before continuing and talking about what has happened recently with PayPal, a little refresh. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we'll really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start talking about one of the most important metrics to watch this year: transaction margin dollar and transaction margin. Both of those metrics have been lackluster in the last couple of quarters, let's say even years. They did say during the earnings call that transaction margin dollars will be positive for the full year. Now this week, you've probably seen this if you're using Venmo, if you're on social media. Apparently the transaction fees are going up. So they sent here that as of July 1st, 2024, transaction fees for receiving payments tagged by the sender as goods and services purchased will change to 2.99%. 5% per transaction. I think that's up from $1.99 plus 10 cents. That's just for merchants. Peer-to-peer, friends and family, I think is still going to be free. Now, with regards to Venmo, during the last earnings call, Alex Chris talked about Venmo quite a lot. He said the following: "We have the leading P2P platform with incredible customer base with disposable income 22% higher than the US average, 60 million monthly active users and 90 million on a 12-month active basis." He also said there's $18 billion of net new funds that flow into the platform on Venmo every single month, but 80% of those dollars leave within 10 days. That's just unacceptable. Of course, with the rise of Venmo, with the rise of Braintree, we know that it hurts margins. Now, when you increase the transaction fees, of course, this should be a positive for margins. Now, it's going to take a while until you're going to see this in full effect. I don't think it's going to move the whole business right now, but it's definitely not going to hurt it. And if it's not going to hurt it, then of course, moving forward, we've already seen some positive works going on at the company. Then moving forward, we might actually see even more positive signs in the coming quarters. There was also a report recently that PayPal Holdings hires underwriters for $1.25 billion notes offering. So the offering will consist of $850 million of 5.15% notes due 2034 and $400 million of 5.5% notes due 2054. Now, why do they do this? Are they raising money for an acquisition, or are they raising money because they want to buy more of their own shares? Like they said, at least $5 billion worth of buybacks will happen this year. Last quarter, free cash flow was $1.76 billion, 76% year-over-year growth. They repurchased $1.5 billion of shares. Beforehand, that was $1 billion. Now they're at 1.5. Maybe next quarter and the quarter after that, if the stock doesn't move much, maybe they would like to buy more, and that's why they're raising. I don't know. It's just an assumption I'm making. Moreover, with regards to the total take rate, transaction take rate that has come down quarter over quarter, they said also that take rate will come down this year, but not as much as last year. Again, it's all about a transition year, but in my opinion, it's going to be a transition year where we're going to see positive signs sooner rather than later, especially exiting 2024 into 2025 in a much better state. Alex Chris has repeated again and again, he wants this business to grow, but grow in a profitable way. And for those that focused on the active accounts metric, which has peaked in Q4 of 2022, since then it has come down, you should focus on the quality, not on the quantity. And actually, quarter over quarter, that did rise. But in my opinion, that's not the most important part here. If you look at the other metrics, number of payment transactions, transactions per active account, those to me are a bit more interesting right now. And as I wrote, more product innovation will lead to more adoption will lead to more checkouts, and more checkouts will mean more money flowing through the PayPal ecosystem, more profit dollars for the company. And so if we go and look at what the analysts are expecting for this year and the coming 2 fiscal years, by the way, if you can clearly see here in the last 5 years, the stock is down close to 44%. If you held this for 5 years, you're down 44%. Quite the underperformance. Anyways, analyst estimates fiscal year 2024, sales growth of just 7.5%, EPS growth negative 19%, but then a reacceleration in both 2025 and 2026, sales growth of around 8%, and EPS growth between 9 to 10% year over year. In my opinion, they could probably beat those assumptions. And so right now, looking at the PayPal stock on the weekly here, we can see that since the October lows, we have been making higher lows. For now, that still stands. There is some support here at around $60 or so. In my opinion, the long-term trend line has been broken. I mean, the long-term, the one that started here in August of 2022. Previously, we had some issues going over that. In my opinion, we did break out of it. And now if we can stay above that orange line here, and especially staying above that $60 mark, I think we're going to be quite good, especially going into the next earnings season, which will be towards the end of July. So overall, to conclude, what's going on with PayPal right now? We're not getting each and every week some new updates, but here and there you're hearing some improvements on the first look products that were announced. some new information that comes out here and there that can help us understand if the business is going into the right direction. In my opinion, it is. So again, why do we pick individual stocks instead of going and investing in the index, for example, and sleeping well at night, not caring about weekly or even daily or maybe even monthly stock action? Well, it's because we think we can pick out winners. We think we can pick out big winners that will outperform on the market. And maybe again, in the short term, you will lag behind the market like most of us. If you have picked, let's say, Palantir when it was at 10 or even at $7 or so, it took a while until we outperformed the market, right? But was it worth it? 100%. I think the same might happen with PayPal. That's why my money is in that stock right now. I could be wrong, but I think the risk reward is definitely worth it. Again, that's just my thoughts. Of course, leave yours down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.